Bitcoin just hit 124K. Markets price a 100% Fed cut for September, cracked 125K, and Wall Street's eyeing 150K. Will your portfolio ride or crash? Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is August 15th, 2025. I am Nova.
I am Satoshi.
Bitcoin, it surged to new intraday highs yesterday, pulled back a little, but still its year-to-date gains are impressive.
Right, around 32% up for the year now. And Ether also had a really significant rally, hit $4,780, its highest since, late 2021.
Wow, yeah. And currently around $4,630, up about 1.8% daily.
And it wasn't just the big guys. You saw BNB, SOL, they climbed over 1%. Even, the meme coins like Doge and Shiba Inu saw gains around 1-2%. PEPE was up slightly too.
So risk appetite definitely seemed to extend beyond just the blue chips, though, still way below their all-time highs, right?
Oh, absolutely.
Right.
But it signals broader bullish sentiment. Look at Bitcoin's 24-hour volume, nearly $98.5 billion. That points to real enthusiasm.
High enthusiasm, yeah. So analysts are eyeing that $125,000 level for Bitcoin. A sustained break could mean maybe $150,000 next.
That's the next psychological target people are talking about, yeah. But, and this is important, rapid rises always bring more volatility risk. You have to be ready for some swift swings, potentially pullback.
Always the case. So, okay, strong charts, but you mentioned the macro backdrop. How did those U.S. inflation reports play into this? That seemed key.
It really was. Initially, you had the July CPI data come in pretty mild. Consumer prices up just 0.2%, annual inflation at 2.7%.
Okay, so that boosted hopes for a Fed rate cut in September.
Exactly. But then, bam, the producer price index, the PPI, came in way hotter than expected. A 0.9% jump in July.
0.9%. That's the biggest since June 2022, wasn't it?
It was. And that wasn't just a number. It immediately, shattered hopes for a big Fed cut.
Yep.
Traders had to recalibrate instantly.
So the odds of a larger, say, 50 basis point cut just disappeared.
Poof. Gone. Dropped to basically zero. While the probability of a standard 25 basis point cut became almost certain, 90% odds.
And that rapid repricing caused market ripples, volatility, liquidations.
Yeah, you saw intraday volatility spike, reports of liquidations for those using high leverage. It shows just how sensitive crypto still is to these traditional economic signals.
Really highlights it. Okay, so beyond the Fed, what about other policy shifts? Europe, U.S. Treasury.
Well, across the pond, a Reuters poll suggests the European Central Bank is probably going to hold rates steady at 2% in September. Investors there seem to be settling into a higher for longer view.
Higher for longer, okay?
So maybe seeing only a brief cut in March 2026 before rates might rise again and stay above 2% through 2027.
Interesting. And on the U.S. side, Treasury Secretary Bessent clarified the Bitcoin reserve plans.
Right, he made it clear. No new Bitcoin purchases for the strategic reserve. Instead, they'll build it using seized crypto the government already has.
Ah, okay. So using existing assets, how much are we talking about?
Around $15 to $20 billion worth, apparently. The key emphasis was on it being budget neutral.
Budget neutral, got it. And despite that PPI surprise, Goldman Sachs still sees Fed cuts coming.
Yeah, their forecast is still for 3 cuts in 2025, September, October, December, likely 0.25% each. And then 2 more in 2026.
Bringing the Fed's rate down to maybe 3.0, 3.25% by the end of 2026?
That's their projection. So, the interplay between inflation data, central bank moves, government policy, that's still the biggest macro driver for crypto right now. CPI, PPI, Fed odds, those are the big movers in the last day.
Makes sense. Okay, let's shift from the macro view to the industry itself. Some really major crypto developments yesterday, too.
Absolutely. Bitcoin hitting that new all-time high. Around 124K intraday. That wasn't just about rate cuts.
Right. You mentioned institutional buying and regulation playing a role.
Definitely. Continued institutional interest, plus more favorable U.S. regulatory signals, things like allowing crypto in 401k plans, the stablecoin legislation moves, they all add up.
And that pushed the total crypto market cap up significantly.
Yeah, to roughly $4.2 trillion. A big number.
And we're seeing more crypto companies successfully hitting Wall Street too, right? IPOs making waves.
Exactly. Bullish, the crypto exchange operator. They went public on the NYSE, raised over $1 billion, and jumped nearly 60% on day one. Market cap around $8.8 billion now.
Wow. That follows Circle's IPO back in June.
Right. Circle Internet, the USDC issuer, their shares soared too, valuing them near $35 billion. And that was partly boosted by the Senate passing the Genius Act for stablecoins, creates a federal framework.
That regulatory clarity seems key, which maybe brings us to Citigroup. That feels like a big one.
It really does. Citi, one of the biggest U.S. banks, is now seriously looking into digital assets. They're assessing custody for stablecoins, safekeeping the underlying assets like treasuries and cash.
And potentially stablecoin payment services, too.
Yeah, payment and conversion services. Plus, they're even considering custody for crypto-linked assets like Bitcoin ETFs.
Which is currently dominated by Coinbase, right? They hold something like 80%.
Over 80%, yeah. So Citi potentially stepping in is significant. It just underlines how these major financial institutions are really starting to embrace crypto, driven by clearer rules and, frankly, client demand.
It feels like a real shift. So, okay, wrapping this up, what's the big picture takeaway for our listeners?
Well, the market's shown impressive strength, hitting new highs. That's fueled by supportive macro trends like expected easing and better regulatory clarity. Sentiment is pretty optimistic.
And caution is still needed.
Absolutely, caution is warranted. That journey to record highs, it proved again that volatility is always there. So, for you listening, stay informed on those macro developments. They can turn the market fast. And, as always, prudent risk management is key.
Right. So here's a final thought to chew on. We see major banks like Citi exploring stablecoin services, the U.S. government building a Bitcoin reserve from seized assets. How might this deepening institutional embrace fundamentally change what crypto even means for the average investor in the next few years? Something to think about.
You've seen the crypto headlines. Now get the signals that impact your holdings. Money.ai scans 1.3 million signals a day, from token prices to Twitter sentiment, and gives you one personalized briefing. No hype, no noise, just your crypto edge. Download Money.ai. Stay ahead.